The Committee for Economic Development of Australia found a series of productivity issues hitting the construction industry. Red tape, for example, where in Sydney, applications to build an apartment block have ballooned from 12 pages in 1967 to hundreds this year, many requiring structural, environmental, traffic and often heritage assessment. While larger construction firms, that's those with more than 200 employees, generate 85% more revenue per employee than smaller companies with 5 to 19 workers.
There are some things government can do, and the things we've highlighted in this report will make headways toward building more homes. So that's things like streamlining and making our land use regulation as consistent as possible across the country. So construction firms can enter different markets and the really good ones can grow and build more houses. We can also look at our tax settings as well and look at that difference between how we tax workers and how we tax contractors. So that way, really good workers don't jump ship and start their own businesses and then remain small.
CEDA says improving recognition of migrant qualifications would be another major step towards boosting productivity by attracting more skilled tradespeople into the industry. As last week's interest rate relief flows through to homeowners, those in strata communities are being urged to reinvest in ageing infrastructure. The Strata Community Association says of the 368,000 strata schemes registered by last year, 48% of them were registered before the year 2000, and that means nearly half are over 26 years old, the peak time for remedial repairs.
If you've got a lift, the lift's life's now 15 years and it's $300,000 to do an upgrade on lifts. So it's better to put a little bit of money away every quarter than to try and get a special levy when people may not have the funds available.
More than 5 million people live in strata-titled homes in Australia. Telstra CEO Vicki Brady has unveiled a new 5-year strategy which will ultimately mean less staff but more AI. Speaking to investors, Ms Brady outlined 3 layers which she says will help it address an inflection point as technology and connectivity transform again, creating a massive opportunity for the company. She also defended accusations from rival Vodafone last week that it had grossly overstated the size of its network.
We ran additional testing just to be 100% sure in our labs. And so, yes, we stand by the 3 million square kilometre of coverage without an external antenna.
The company also reaffirmed its full-year guidance. Telstra shares rose 0.4% today. Elsewhere, REA Group fell. The ACCC has required the online property listings group to provide information about certain subscription offerings. The banks did well, but the tech sector did best. So all up, the Australian share market closed 0.6% higher, hitting a 3-month high. Analysts say confidence is returning following the latest EU-US trade talks, as they factor in the likelihood of lower tariffs than those currently being proposed by Donald Trump around the world.
What that all means for the US economy in particular is, we think, a manageable situation. There will be some increase in inflation on a temporary basis and a slowdown in growth. But with the central bank cutting rates and a reasonable fiscal impulse, the economy is still in reasonable shape. We expect that that is a manageable situation, and that's consistent with continued positive returns from financial markets.
And in currencies, the Australian dollar is down against the greenback to be back below 65 US cents. That's ahead of a local inflation update tomorrow. It's also down against most of the other major currencies. The European Union is urging China-founded e-commerce platform Shein to comply with EU consumer protection laws as it uncovers several breaches, including false discounting, pressure tactics and deceptive and misleading claims. In a statement, commissioners warned the EU would not shy away from holding the platform accountable, including imposing fines for failing to address the concerns raised. The bloc has given the company 1 month to respond to its findings. And Tesla continues to lose market share in the EU, with registrations down 52% last month. That's according to the European Automobile Manufacturers Association. They're also down 46% so far this year. That's despite battery, hybrid and plug-in hybrid vehicles across brands increasing market share in the 4 months to April. Volvo, meanwhile, which has seen a 19% decline in registration so far this year, is cutting 3,000 white-collar jobs to reduce costs. in response to tariff uncertainty. The Swedish vehicle maker is restructuring as it drives toward its long-term goal of becoming a full electric car company. Janice, in the EU, total petrol car registrations fell 21% so far this year.